Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a report that might leave some investors feeling a bit like they're on a roller coaster, but not the fun kind. We're going to unpack Peraso Inc's latest filing, and it seems like they're facing a challenge that could lead to them being kicked off the stock exchange. This report is called an 8K, which is basically a company's way of saying, hey, something important happened and we need to tell everyone right away. In this case, it's about potentially getting delisted, which means their stock could stop trading on the Nasdaq. That's a big deal, so let's dig in. The key date here is April 4, 2025. This is when Peraso officially got a letter from Nasdaq, the stock exchange, telling them they're not meeting one of the rules for staying listed. The problem is that Peraso's stock price has been too low. Nasdaq requires companies to maintain a minimum share price of $1. Peraso's stock price has been below when your stock price is low for that long. It's a clear indication that investors are losing confidence in the company. This can be due to lots of things like poor performance, bad news, or even just market conditions. So what happens next? Well, Nasdaq isn't just kicking them off right away. They're giving Peraso a chance to fix things. Peraso has 180 calendar days until October 1, 2025 to get their stock price back up above $1 and keep it there for at least 10 business days in a row. Now, if Peraso can't get their stock price up in that time, they might get another chance. They can ask for another 180 days, but there are some conditions. They need to meet the requirements for the market value of publicly held shares, which means the overall value of all the shares owned by public investors, and also meet all the other initial listing requirements, which are like the basic rules for being on the Nasdaq, except for the stock price. The report mentions the possibility of a reverse stock split. A reverse stock split is when a company reduces the number of its outstanding shares. For example, they can make every 10 shares into one share. This increases the price of each share, but it doesn't actually change the value of the company. It's like cutting a pizza into fewer slices. You still have the same amount of pizza. Companies do this to artificially boost their stock price to meet requirements. However, there is no guarantee here. If Nasdaq doesn't think Peraso can fix things, or if Peraso doesn't meet all the requirements, they could get a notice saying their stock will be delisted, meaning it will be removed from the Nasdaq. It's important to know that this letter from Nasdaq doesn't mean Peraso's stock is immediately being delisted. It's more like a warning and a chance to turn things around. The company says they're watching their stock price and thinking about what to do if it stays below $1. They have to weigh their options to figure out the best path forward. So what does all this mean for Peraso? Well, it's not great news. A company facing potential delisting is often a company that's struggling. It could be struggling financially, or it could be facing other challenges that are making investors lose confidence. Unfortunately, there are no financial statements in this report, so we can't do a Warren Buffett-style analysis of Peraso's balance sheet to see how they are doing. Now let's put this all together and try to understand what's going on with Peraso. The fact that Peraso's stock price is below $1 is a big red flag. It suggests that investors are not very confident in the company's future. This could be due to a number of factors such as poor financial performance, increasing competition, or changes in the industry. However, Peraso still has a chance to turn things around. They have until October 1, 2025 to get their stock price back above $1. They could try to improve their financial performance, announce some positive news, or even do a reverse stock split. It's important to remember that there are risks associated with investing in a company that is facing potential delisting. If Peraso is delisted, it could be more difficult to trade their stock and the price could fall further. Despite these risks, there could also be opportunities. If Peraso is able to turn things around, their stock price could rebound. However, this is a high risk, high reward situation. In conclusion, Peraso is facing a significant challenge. They need to act quickly to get their stock price back above $1 and avoid being delisted. Investors should carefully consider the risks and opportunities before investing in Peraso at this time. Thanks for watching. If you found this decoder helpful, please smash that like button, leave a comment, and subscribe for more deep dives into the world of corporate filings.